Customer lifetime value. What is it? Why is it important? And how do you measure it? Hi, my name is Yatin Singhal from E-Commerce Hero, and today I'll be talking to you about customer lifetime value. Before we get started, if I can just ask you to smash that like button and hit subscribe, it'll help me out great deal to produce more content for you. So let's get right into it. Customer lifetime value in the most simplest form represents the worth of any customer for a given business. So let's take an example. Let's talk about moisturizing cream, and let's just say a bottle of this cream costs $5 and I buy 4 of these bottles in any given year. So that's $20 of spend in a year, and let's say I use this particular brand A for 5 years before switching to another brand. So in this case, I spend $20 a year for 5 years, that's $100 total. So my customer lifetime value for this particular brand A, is $100. Okay, so now that we have talked about what customer lifetime value is, let's talk about why is it important. Customer lifetime value is important because it defines the upper limit of what a business should be ready to spend to acquire any customer. So in my previous example, I spend $100 on brand A in my lifetime. So this brand should be ready to spend maximum up to $100 in order to acquire me as a customer. In reality though, this amount tends to be much higher or lower depending on a few factors. So it can be lower because the company still needs to spend money to produce this product, to fulfill this product, to pay retailer margins, driving the marketing cost lower. It can be higher because the company might be confident to sell me more products and services in the future, which would drive up the customer lifetime value. It is important to recognize that different sets of customers have different customer lifetime values. So for example, I buy 4 bottles a year at $5 each for 5 years, giving a customer lifetime value of $100, whereas there may be another customer who buys 8 bottles a year, in which case they'll be twice as valuable to the company as me. You may have another set of customers who buy 8 bottles a year and who don't switch brands each 5 years but switch brands each 10 years, in which case they will be even more valuable to the company. And true business success long term comes in marketers being really able to identify these different set of customers with different lifetime values and then being able to optimize their marketing strategies, pricing and product mix for a particular set of customers. So now that we have talked about why customer lifetime value is important, let's talk a bit more about how to measure it. For the vast majority of marketers and business owners, the best way is to stick with a simple calculation of multiplying their average order value with the average purchase frequency and the average lifespan of a customer. If you want to take this to a more advanced level and incorporate some financial aspects into it as well, instead of focusing on customer lifetime value at a revenue level, you could peel off some of the costs of shipping, manufacturing and other variable costs associated with manufacturing the product to arrive at a customer lifetime value at a profit level. And if you want to go further, you can take these cash flows each year, project them into the future and then discount them at the cost of capital of the company to arrive at a net present value and customer lifetime value for a particular customer today. And that really gives you an insight into how to optimize your business for growth through these marketing strategies and how you fund your company in order to drive growth through marketing. So that's all there is today for customer lifetime value. I hope this video has been useful for you. Tell me in the comments below what you think.